Welcome to the BBC's News at 1. The Prime Minister has added to the pressure on banks by urging them to pass on yesterday's interest rate cut to their customers. Some of the major lenders like Lloyds, TSB and HSBC made an immediate decision to pass on the 1% Bank of England rate cut to customers with a variable rate mortgage. But Britain's two biggest lenders, Halifax and Nationwide, won't pass on the full amount. Speaking this morning, Mr Brown said he's already in discussions with the big banks. Richard Scott has more.
The tree might have arrived at Downing Street, but Gordon Brown's unlikely to be feeling much festive cheer. He's struggling to persuade lenders to pass on yesterday's rate cut.
Banks should really pass on the interest rate cuts.
But you own the banks after the recapitalisation,
well,
we do.
We're talking to the banks. Remember the last time and the interest rates came down 1.5%? We had to talk to the banks before things moved forward, but things did move forward, and we'll be talking to the banks again.
At first glance, you might think Barclays have been the most generous, cutting its standard variable rate by 1.15%. But that's because they didn't cut at all last time, and their rate is still at 5.49%. Nationwide didn't pass on the full cut, reducing their standard variable rate by 0.69%, but that took it down to 4%, one of the lowest on the high street. Halifax, though, only passed on 0.25% of the cut, taking their rate to 4.75%. That's unlikely to please the government, especially as it's taken a £12 billion stake in the bank. But some think the government is wrong to pressure lenders into passing on rate cuts.
It's not surprising that different banks take a slightly different attitude to whether they're going to pass this through. I think that for the government to get involved in micromanaging the particular interest rate decision of particular individual banks is a mistake.
If lenders do cut mortgage rates, though, savings rates are also likely to suffer. You can see just how much division this creates by looking at this morning's papers. We've got one front page, for example, talking about how the banks are being criticised for not passing on the full rate cut to borrowers, whilst at the same time one of its rivals is showing just how bad things are for the savers, and in particular the elderly. And the point about all of this, of course, is that you can't have it both ways. The idea of cutting interest rates is to boost spending and help the economy. But for savers, it means the opposite.
A cut in interest rates is not wholly good news for the economy anyway. In fact, for people like pensioners or anyone living on their savings, it's actually like a tax increase. It cuts their income.
Low interest rates could also put people off saving. That would mean banks have less money to lend, restricting credit even further. Richard Scott, BBC News.
Well, with us now is our economics editor Hugh Pym, who's here. It's quite confusing this. Should the government be forcing banks to do more?
Well, Louise, you heard there Sir Howard Davis, former Deputy Governor of the Bank of England, saying it's very difficult if governments try to micromanage these banks. And remember, when the government took these stakes, they pumped money in exchange for share stakes, they said they'd be at arm's length and they let the managements get on with it. And here you have the Prime Minister saying very directly we want them to pass on these rate cuts. The banks are being pulled in different directions because obviously borrowers, people with mortgages, want a big rate cut. Savers, as we heard from Richard there, don't. And, you know, the way you make money in banking is between balancing those two interests, so it's very difficult. And at the same time, we as taxpayers want our money paid back. The government's made it clear that this money should be paid back as quickly as possible, so it does put the banks in quite a bind.
OK, what about the government? Can it take more control of the banks, given it has some already?
Well, there is pressure growing now for the banks really to be fully nationalised. It sounds pretty extraordinary, but MPs, some MPs, serious arguments are being made for full nationalisation. And in fact, the Prime Minister's official spokesman was asked about that this morning, and he said it would not be right to rule out any particular option, although the Prime Minister didn't necessarily favour going down that route. But you have to say, if the government do want to get the banks to do their bidding and to get out and lend to the economy just as it's falling into recession, you might argue that the only way to do that is to have full control through full nationalisation, although it seems a pretty extreme option.
Hugh, thank you.